2023. Let's now listen into Edward Morse of Citi to really understand the potential impact of all this on crude prices going forward. And it's also, remember, politics of economics playing out here. Listen in.
The oil cap is well below where the European price is. It's above where Asian prices are, but they don't matter much in terms of the oil caps. So for all practical purposes, the oil cap is irrelevant by a good $8 to $10 a barrel. We have a cap at 60, and most seaborne crude, which is what this is all about, going into the West from Russia is in the $50 range. So there won't be any impact unless Moscow goes ahead with its threat and says, we're not going to export X amount for whatever reason. But so far, we don't think that's going to happen. The market has not moved a lot. The market has been moving for reasons other than what's happened over the weekend. The market's been moving because of optimism about China opening and concerns about the US dollar because the Fed might be reducing the pace at which it's raising rates. Both of those may be iffy, by the way. So I think we're going to have the same kind of volatility in the market that we've had, through the fourth quarter. We'll find out that China is not going to be rebounding in terms of demand until sometime after the first quarter is over. And we'll find out probably that given the other thing that the Fed reads, namely the pace of growth in the US economy, that they're going to not relent on raising rates. So we'll see what happens. But I think volatility is what we should expect rather than a continuing rise in prices. Well, I look at supply and demand, and I don't know what Saudi Arabia and the UAE are going to do. I know they have a difference of view. I know they have to monetize their reserves and do that for a while. But when we look at supply and demand balances, we're looking, as we did this year, at a surplus and lower prices. We happen to have prices at the end of the year that were equal to those at the beginning of the year. They're not higher. When we think about next year, we're looking in our numbers at about 1,300,000 barrels a day of demand and 2.5 million barrels a day of incremental supply. That means that OPEC has to make a decision, the OPEC plus countries, as to what they're going to do. Now, there's plenty of margin of error because there are so many unknowns. Is Russian production going to go down? We don't think so. We think that there are going to be enough buyers found in the world, in the markets as they exist, that Russian production is going to stay more or less where it is. If it's going to be down, it won't be down by 1 million barrels a day. It may be down by 200,000 or 300,000 barrels a day. But as between the Western Hemisphere's growth, which is in itself close to 2 million barrels a day, and the unknowns associated with Libya, Nigeria, Iran, Iraq, Venezuela, we could have disruption to supply by 2 million barrels a day, or we could have an addition of 1 million. So, the geopolitics of this, based on what's happening in domestic economies, is extremely hard to read.
All right, that is the word from Citi on crude oil prices, saying that we should continue to see some volatility more than just a straight up rise in prices. But with that, let's also bring you updates from the Russia-Ukraine war. German Chancellor Olaf Scholz says that it would be a grave mistake to completely stop talking to Russian President Vladimir Putin. He says this after they had a telephonic conversation with him over the weekend and said, I quote, "This is why it is also important that the French president and I, as representatives of the G7 countries and as two NATO countries, keep seeking dialogue again, however, without any illusions." End of quote.
All right, some of those